I mentioned a little earlier that we've had foreign investor interest coming through into the markets, but also inflation sitting at 9.19% for March seems to be directing investors to the equity space as well, where they are seeking investment avenues that could possibly beat inflation. What are you making of the kind of inflows that we're seeing here that may well trigger some upward momentum on the local bourse?
Well, firstly, as you said, it was the foreign investors who came and bought the lows on the market. We hit a 13-month closing low last week, and then we saw some very good activity on the buy side, and we saw the big caps respond very powerfully, as you correctly noted. I think the market, the inflation number had a sticker shock. It was just over 9%. We've got practically a perfect storm breaking on the inflation front. I'm very bullish on the price of crude oil. I think $120 on NYMEX is a shoo-in. That's another 12%, I think. So I'm concerned that this inflation rate is going to continue to spike higher because we are essentially a fuel importing economy. And it will also put pressure on the shilling again. But having said that, the bond market has been sort of in the sweetest of sweet spots last year, the year before, practically from the time Kenyan issued their infrastructure bond. And I think the market, the domestic investors are very overweight bonds. And I'm not so sure the bond market is the place to be right now when you've got inflation probably looking at a peak of around 15% on this cycle. So as you're noting, I think I expect better flows into the equity market and a potential problem in the bond market if we see a further spike in inflation or any other uncertainties there.
Certainly, we've had prices on quite a few fronts coming low enough for investors to see them as bargains. And I mentioned Safaricom being one of them. I mean, this is a company that's really been hammered, sitting now at 4 shillings. What are you making of the buying opportunity it presents?
Well, it's got hammered. It traded at a 52-week high last August of 6.15. Then we had the voice war. It practically came down in a straight line, hit a 52-week low of 360 middle of March, and we've now rallied from that level up to, as you said, 4. I think it's brutally oversold. I think the reason it's oversold is because there's so many individual retail shareholders in the counter still. It was the biggest IPO in Kenya. I think their nerves got absolutely frazzled by Airtel. And I think it presents enormous value. The Safaricom story, the M-Pesa Western Union tie-up takes M-Pesa international. The data story is not slowing down, it's accelerating. And I think the voice story is really in the share price. We know Airtel are behaving irrationally. We know Airtel look at this war in Kenya as a wider proxy war between Airtel and Vodafone. And I think that is really now baked into the price. I, for one, look for a recovery of at least 10 to 15% from here.
Well, Jubilee Holdings, in the meantime, jumped 20% yesterday to 216 shillings. And that, as I said, after reporting an 84% rise in pre-tax profit for the full year. What's your approach to these insurance players right now, Aly-Khan? Because I was chatting to a broker last week and he was saying that, yes, these players are making some stride, but, it's not really the business of insurance that's getting them on this track. It's the recovery we've seen on the equity space, and so investment income that's really propelling them higher still.
Well, very few of our insurance companies make money in the actuarial business of writing insurance risk. They tend to earn their money on reinvesting their premiums. The insurance sector as a whole is riddled with fraud. It's very difficult to make money on it at the moment. We will eventually have a flight to quality, and when that flight to quality happens, and by that I mean there'll come a point when the big companies have to insure themselves with an entity that can make the payment in the event of a big claim. And I think when that happens, you're going to have a huge flight to quality to Jubilee. Getting back to Jubilee, I understand there's been a big recovery in the investment income, but at a price earnings ratio of just under 5. I think you've got 0 downside risk in this stock, and I've got a price target of above 300 shillings a share. It's thinly traded, it's difficult to get hold of, but clearly they're firing on all cylinders. They've expanded regionally, it's a very tightly run ship, and there's enormous amounts of fat on the balance sheet because they do not mark to market most of their private equity assets. And you've got stuff on that balance sheet which, when it is unlocked, is going to release enormous second round value.
Well, we're looking at quite a few listings emerging from this space this year. I mean, I think at last count, I had it at 3. So what kind of appetite do you see them catering to from the investor community at large? I mean, you've mentioned now that Jubilee stands as a case in point right now, but with these new players coming on board, how do you see that changing market dynamic?
Well, I think British American, to whom you're probably referring, who are looking to IPO at some point this year, are an entity similar to Jubilee. I think they're not yet competing head-on with Jubilee, but they're obviously a competitor that's well-funded and has the potential to take a bite out of Jubilee's business. We've also had the introduction by listing of the CFC insurance company. This is under the umbrella of Liberty Life, and I think they too are going to be potentially a good customer. But there's plenty of insurance business that needs to be transacted, and I think at tier 1 insurance business, the big multinationals and so forth, and I think that's the market I would be going after, and I think there's plenty for everyone. We've
seen some interesting movement come through on Sasini. Its share price jumped over 4% yesterday, and driven by speculative investors mostly, who are expecting good fortunes, as I said, with the onset of the rains. Fundamentally, the investment case that we're looking at here, Aly-Khan?
Can I just take you back to a result that was released about 2 weeks ago? It was Limuru Tea, which was a tea company which is just based outside Nairobi. EPS increased by about 177%. And I expect that trend to play out across the tea sector. Tea prices are way above their moving average. Some investors were worried about production because of the meteorology department saying we're going to have rains 30% below the moving average. But it tends to play out and work out. I'm very bullish about these stocks. They trade between 2 and a PE of 4. It looks to me, you know, a slam dunk investment. It's taken a long time to come to the fore, but I think ultimately soft commodities, tea prices are in a sweet spot.
Just before we head out, Aly-Khan, to what extent is there evidence of speculative activity in the markets? Because that would contribute to, the evaluations that we're doing in terms of the veracity of an upward momentum that could be sustained on the local market.
There is zero speculative activity at the Nairobi Stock Exchange. It's a consequence of the Safaricom IPO. Most retail investors were long, they were wrong. They've taken such a long time to work that position off. So I think, you know, the market here is not speculative. It's majority controlled by foreign investors right now. They're the big players. They're the ones who bought the market at the bottom, and they're the ones who are driving direction right now. So the concern might be if we see a second round of weakness in North Africa and the Maghreb countries, as we saw when Egypt was shut down for 38 days, and that put a lot of pressure actually on our stock market because people had to reach for liquidity in places like Nairobi to shore up positions in Cairo.